Hey everybody, and thanks Jeanette. Good to see you all, and I'm sure we've got some familiar faces in the room. We will kick things off with our smart money trading presentation today, and we will start off with a quick disclaimer. Of course, this is for educational purposes only, not a recommendation to buy or sell any of the securities discussed. Trading involves risk of any capital that you invest. Acorn Wealth and Smart Money Trading is not a financial advisor in any jurisdiction or province. And for full disclosure, many of the positions we'll speak about, particularly towards the end, are positions that are likely being held by myself or the Acorn trading account or the employees and contractors of Acorn Wealth Corp. Okie dokie. So, everyone ready? Today's presentation is all about how to predict explosive moves following the insiders. As Jeanette said, she's seen this presentation before because this is something that is really deeply ingrained in absolutely everything that we do. We don't teach strategies that we don't use ourselves, and this is a strategy that I pretty much exclusively manage all my money with. It's where our Acorn alerts come from, and it is the edge in the market that can, if you want to talk about the best indicator in the market, I wholeheartedly believe that the most powerful leading indicator you can get is seeing insiders loading up on tens of millions of dollars of their own company. And we're going to talk about exactly why that is and how we can harness it. But before we dive into that, I'm John Seville, as you know by now, but I'm the founder of and CEO of Acorn Wealth. We started Acorn Wealth about 15 years ago now. And obviously what we're going to cover today is we're going to dive deep into the concept of the insiders, which is the most powerful smart money indicator of all. They give us an incredible level of insight, and when we combine what we're looking for from the insiders with the powerful patterns which tell us the probability of the execution, this is an incredibly powerful 1-2 punch, because then we're getting the inside of insiders, which is, you could argue, the most powerful fundamental research one could do, with the power of execution, which is what high probability patterns do. They tell us when to get in, when to get out, and how to harness that move that the insiders often give us the insight for. The last piece we'll talk about today is set and forget execution. You just heard the previous speaker talk about, ignoring the automation of auto trading and these algo trading stuff. I would agree. We do not automate our trades like that either, but there is a very beautiful in between where you don't go full automation with some auto trading system, which I would never trust, but automate your trades yourself. And that is how we trade, and that is a very exciting part of today's presentation, which is talking about set and forget. So we'll talk about that today. And so let's go, let's do it. Again, so just a little bit about me. When I first started trading, I was 16. I fell in love with the market pretty early on. I was fortunate enough to have a high school economics teacher that put us into a stock trading game in our economics class in grade 10. And we had to, over the course of that year, we would compete with schools across Australia. And what we would have to do is bring the courier mail into class each day, and we would look at all of the stocks in the Australian stock market, and we'd have to research and pick our own stocks, and then we would chart them. Back then, we weren't using the technology we have today, but back then we would take grid paper and chart the stocks ourselves using a 2B pencil, and then whoever had the best portfolios would win prizes by the end of that year. And so that was, to me, that was very exciting. That kind of got me hooked, and then the more I delved into that, and the intrigue of the stock market and putting the puzzle together, the more I got into it. But look, that was the beginning. When I started trading with real money, that's when things got difficult. And the horror stories that I had early on, I think, are probably similar to many of the traders here in the room. I blew up an account or two early on. I had good strategies and bad strategies, but I think there was a lot of noise. I think was the main problem with that. And one of the horror stories that I thought I would share with you is this probably the worst one. My worst loss I ever had early on in my trading was when I was actually sitting up in Vancouver, and I was traveling there. I was probably 18 or 19 at the time. And anyway, I was sitting at this high top bar stool, this kind of dark, dingy kind of Vancouver pub. Anyway, it was noisy, it was full. There was and there was this table right next to me, and these guys were all dressed in fairly fancy Italian suits and had Rolexes on, and they were all cheersing expensive champagne, and I thought, oh well, they must be doing something right. Anyway, as they start to talk, I kind of was eavesdropping in on their conversation, and I heard them talking about their stock. And how the price the stock was at, and how much money they were making, and then now I got really interested. I'm only a few years into my trading career at this point, and obviously always looking for an edge. So I thought, okay, let's cozy up to these guys, right? Because it's who you know, not what you know. Let's see if I can get some insight here. And so these guys, they started telling me about their story and how amazing their company was, and how it's going to go sky high. And I thought, oh great, well thanks so much for sharing this with me, guys. How much money do you think I should put into a company like this? And they said, well, Johnny, how much money do you want to put into a stock that could go up 1,000% more? And I thought, oh, all of it. And I did. I made that error, that emotional, greedy trade, and I put my entire account into this stock. And you can probably guess what happened to the stock from there. It went straight down. So I put my entire life savings stupidly into this company. I believed these guys. I thought there was an amazing opportunity. Got greedy. The thing went from, I think, $3.70 where I bought it at. I think I sold it at 5 cents a few months later. Now, what the sad part of this story, which was one of the most powerful learning experiences for me, and this is why I consider this a good story for me, because I learned from it early on. The sad part of the story is I later found out that those same insiders that were cheersing that champagne, that were telling me, that this was a great opportunity to put all my money into, were actually selling their own stock at the same time. They had actually been selling for about 3 months, and while I was buying, I was likely buying their shares off of them at the same time. And they were almost completely sold out within about a month of that conversation happening. That to me was really an eye-opening experience, and that was where I vowed to never to believe in that kind of public bravado and so forth. I was eaten, and so this was a lesson to look deeper into stocks and see when what's really going on here. So MBH says, best lesson you could have gotten at that age. You're absolutely right. And so this is one of the seeds that was planted in my mind early on as to the power of looking at what's really going on behind the scenes and being able to find the truth. Because I think that most people here in the room would agree. Give me a one if you agree. Give me a one in the chat box if you agree with this. That one of the most difficult things to find in the trading industry is to find the truth. How do we find transparent ideas? How do we find the truth? How do we find something we can really believe in and understand and feel confident with, right? I would say a big one. And so that's what Acorn Wealth is all about, and that's I think where you'll find what we talk about today is quite unique. This is an email from one of our students who had been in the market for over 40 years. Harvey says, after being in the market for over 40 years, that this is the most unique service that he has ever found. Because what we try to do is bring these strategies down to a level which anyone can implement and really puts a big edge in your trading. I talked about the idea of set and forget. So the next piece to this is kind of looking at this set and forget trading, which we'll talk about today. Because as I went to start designing my strategy, going on from this experience and going back to the drawing board and really fine tuning exactly what we were going to be looking for, the one kind of thing that I wanted to develop for myself was a strategy that was going to work for me, right? One of the reasons that I fell in love with trading early on and why I pursued it as my career from the age of 16 on was because I really loved the idea of money working for me. The reason why I wanted to be a trader and not a lawyer or not a fighter pilot or a doctor or something, the reason why I wanted to do this was because this was not a 9 to 5. If I was a successful trader, I should be able to work anywhere in the world on any time frame, and I can put my money to work. I can go off and play a game of golf or lie in bed for an extra time and watch movies, whatever I want to do, but my money should be working for me. But the thing that I found as I started getting into trading is a lot of the strategies that I saw were involved sitting in front of the screen all day and watching the futures market and watching the 5-minute charts. And I thought, well, hang on a second, this isn't what I was after. This isn't money working for me. I'm still working for my money, right? So that was another thing that I really early on realized was that a lot of traders had turned the major advantage of what was exciting about trading into a job again. So it couldn't be that either. And that's what Warren Buffett says. He talks about, if you don't find a way to make money while you sleep, you will work until you die. So this is just my personal opinion, but I believe that trading shouldn't be work. It should be your money working for you, especially if you've worked very hard for your money in the first place. So that's what this system today is also all about. It encompasses all of these things. It's about having a system that allows us to find profitable trades without being stuck at a desk all day, to obviously deliver outstanding results, because that's why we're doing it here in the first place, and something that is relatively easy to understand and that's going to find us the truth. Right. So when we start to look at the first component of this system, obviously the first part of the system is the insiders. The system is about patterns and insiders. The first part I want to talk about is the insiders. The insiders, as I mentioned earlier, are the most powerful smart money indicator or indicator in general that I know, because they are an incredibly they're a leading system. What do I mean by leading? Well, a lot of technical indicators look at what's happened in the past, right? What's happened in the past from a MACD perspective, or a stochastic, or an RSI, or things like that. Many of these indicators that people tend to learn. But the difference about insiders is we're looking into the future, right? Because insiders know about new product launches, mergers or acquisitions, new big customer contracts that might be coming, litigation or court cases that have been resolved, new breakthrough medical situations or FDA announcements they might be doing, which is something that we'll actually show you later today. If a new FDA is coming up on one of their drugs, they're likely to know about that, right? If insiders have that edge, and so being able to, and by the way, what they do when they buy their own stocks, there is totally legal ways that they do this. The law allows for insiders at certain windows to act on their own companies and invest in their own companies. So this is legal. And there's perhaps some times where they do it where they are in the gray area. But most importantly, what we can do about this is we can piggyback off their knowledge. We can piggyback off of the insight that they have into their own companies when we start to see significant buying going on. And this is a a very simple and very powerful way to tap into these explosive moves that may be coming. Let me show you an example of one of these. GRTS, or Gritson Oncology, was a massive move that we saw earlier in the year, which plays into this strategy very nicely. Now, just a little bit of history on GRTS. They are working with Gilead on an HIV cure. They're going into trials with their COVID vaccine, which is a different kind of vaccine, because these guys actually have some pretty amazing technology behind the scenes that's very different to everything else that's being done. And there's a lot of comments and reviews on this company that suggest this could be the next Moderna. And so anyway, with that aside, when we found this company, we found this using our smart money scan, which is something that looks for very unique kinds of insider buying. And so when we found this stock, this is what the chart looked like. So what you can see here in the chart is that we have a downward channel system. Okay, so I just want to draw this on for you. So here's your top line. Here's your bottom line. There's your first downward channel. Now, quick quiz of the audience. Is a downward channel bullish or bearish? Don't worry about what happened here on the chart, because I'm going to explain that in a minute. But normally, when you see a downward channel, do you expect the stock to continue going down or up? Bullish or bearish? Bullish. RK says bullish, but I've attended your meetings. All right, well then you know. Yes, a downward channel is actually bullish. All right, if you look at the statistics, in a downward channel, after it has bounced 3 times in that channel, it's roughly a 70 or as much as 75% probability it's then going to break up, right? And that's important when this is a very basic pattern, but a very easy takeaway from today's presentation that you can go away with. When you see a downward channel, there is a very high probability that it is going to go up. So it is a bullish pattern. And so obviously how we can trade those is when it breaks out of that resistance, we can enter and off we go. We'll probably see some examples of that later today. So what happens in a situation like we saw here, where a downward channel breaks down the wrong way against probability? We would call that a failed downward channel, right? When a downward channel breaks down, what does that mean? Well, what it actually does, when you see a downward channel break to the downside, this is the early signs of a very powerful pattern, which we call a fallen angel. And it's essentially a basic explanation of what that system and strategy is it's where you get a downward channel that breaks the wrong way and then creates this ski jump down the bottom. All right. So is everyone clear on that? Downward channel is bullish, and a fallen angel is where we often get a downward channel that breaks to the downside and creates this ski jump down the bottom. Just give me a 1 in the chat box if that's clear. So the fallen angel pattern is the highest probability, strongest momentum strategy that we know. When I talk to you about, my early days developing my trading plan, this was the after about 5 years of testing and research. I've studied over 150 different patterns. We have spent hundreds of thousands in research, testing all of them. We developed a back testing system where we literally did over 180 million different types of formula testing on every single stock in the market, going back 2 years, 5 years, and 10 years, looking for the fingerprints and the success rates. All of that data aside, the result of that was this strategy, this kind of fallen angel pattern. So I love it, and what we saw is that it was happening here on GRTS. You'll also notice that down the bottom of the chart, as part of this fallen angel system, can everybody see that we had a downward channel, right? So from a pattern perspective, this was ticking all of the boxes, right? We had a beautiful fallen angel system in the large time frame. In the shorter time frame, we were breaking out from a downward channel. So all of these things told us that the pattern was perfect, that the execution was perfect for right now to buy. But what made this more than just a trade? What made this more than just a channel breakout or more than just a fallen angel was the insider piece. Because when we lay on top of that the data that we'd found in that insider scan that we'd run, this is how we found it in the first place. What we had seen is, as it was breaking out of that channel, the director had just increased their personal position by 43%, or $5 million in one transaction on that day. Right? Now, they had an upcoming medical news on their drug treatments. And so only a matter of a few weeks before this expected announcement of the news, Director X puts in $5 million of their own cash. Now, that to me is a very good sign that that news is going to be good. And when we combine that with a very powerful pattern saying we'd be interested in it anyway, that made a perfect storm. And so we alerted this as a buy around $4. I think $4.33, I believe. And as you can see, a few weeks later, that news came out, and the stock went from $5 to 27, which of course is a perfect selling opportunity. I don't think anyone here would have any problems with that type of a move. You know, we don't want to get greedy when we see those massive moves, explosive moves quickly. We take profit, or at least move our stop losses up to protect the remaining move. So that is a great example of what a smart money trade looks like. And we're going to talk about some more later on. I'm going to show you some that even that I'm in right now. But let's go back and talk about the market for a second. Let's go back to the crash of 2020 and talk about how the insiders played a role in how we predicted that crash. Again, I see a lot of familiar faces here. Many of you probably attended our presentations at the beginning of 2020 and the end of 2019. We did 43 web presentations with Jeanette as well. Jeanette was in many of those. We talked about the crash of 2020 that we saw coming, and warning people about that we felt it was time to be very careful and why we were exiting all of our long positions and beginning to buy puts. How did we predict that? Well, a major piece of that was the insiders. So again, who here got badly hurt by the 2020 crash? Or who here missed the buying opportunity at the bottom? Give me a 1 in the chat box if 2020 wasn't a great year for any of those reasons. Yeah, a few people. Yeah, so, but there was one group of investors that didn't miss a beat. Yes, Greg says I missed the short and the long. Well, so let's look at that. Let's learn from that. Just like my experience with those skeezy guys in Vancouver. It's not a bad experience. It doesn't have to be a bad experience if you learn from it. That's the great thing about trading, is we can be reborn any day. All it takes is turning off the bad habits and starting to adopt new good habits, and then executing those habits, right, and not falling back into bad historic decision making. So, I mean, we can put those experiences in the past if we can identify what we did wrong and change it. And so in 2020, if you look at how you could have not have missed that short and how you could have identified the bottom, the insiders are a major way, because they didn't miss a single beat. This was the insider selling in the 3 months leading up to the 2020 crash. There was $13.5 billion worth of selling across the market, across all sectors, in the 90 days before the market began to crash, right? And what you can also see here is almost non-existent buying, right? And then what happened after the market crashed, after they had all sold their stocks, their own stocks. Remember, they're not just remember, on this chart, this isn't just saying what the level of selling in the overall market. This is telling you what the CEOs and chief financial officers and medical directors and chairmen of the board, this is telling you what they're doing with their own companies. When they're selling their own companies in huge droves, that should be a warning sign when you're seeing it in every sector, right? So after they had sold their own companies at the very top, the market crashed, and what happened at the bottom was they bought back, right? This is an article from the Wall Street Journal. Who's betting on a rebound in stock in corporate stocks? In stocks, corporate insiders. This is something we were already telling our students, by the way, in our trading room and in our alerts before this article came out. But you can see it here from the Wall Street Journal. What actually happened here was it was about 3 days off of the absolute lowest that the market crashed to. And remember how aggressive that drop was? The market futures were getting halted because it was dropping more than 7% overnight. That crash was very sharp, very aggressive. But while that was crashing, insiders stepped in and they actually bought back at record levels. And it happened 3 days off of the lowest the market ever got to. And then, of course, we know what happened after the market skyrocketed. Do you know when the last time was that we saw anything close to this level of insider buying? Take a guess. When was the last time in history that we saw anything close to this level of insider buying in the market? The lows of 2009. Exactly. That was the last time we saw anything close to that level and conviction of insider buying, and it was the last major bottom of the last major crash. Rascally little rabbits. This is the kind of insight that insiders can provide, right? Because they are the ones that know what's going on, and this allows us to anticipate major market moves instead of reacting to them. Your level of emotional health, and your anxiety, it shifts dramatically from being anxious and worried and hiding your head in the sand to being excited and in control when you're able to anticipate things instead of reacting. This is from Ralph. First off, kudos for preparing us for what looks like the start of the dip. This was before the crash started occurring. I believe you've been talking about this since before Christmas. And from my perspective, I'm well prepared. Actually, this is the most prepared I have been. I feel comfortable. I'm not panicking. Many thanks. Up to this point, I've been lightening up and have my stop losses in place. And in the past few weeks, profited from some fantastic long trades. With this move, I'm starting to get stopped out. I'm quite calm about it. It's how the business works. Some you win, some you lose. Stick to the rules. Trade high probability smart money setups, and you'll make money. It is working. Thanks. So this is again the idea of anticipating. So again, let's go back to that idea of the insight. I mean, again, if the market was crashing and trillions of dollars were being lost, why were corporate insiders putting billions of dollars into their own money, right? And more importantly, how can we profit from this? How can you profit from this? So let's go back to looking at this scenario. So, you know, obviously 2020 was, you know, the year that's changed everything. You've heard this before. You've heard this in the news. You've heard this in all the talking heads talking about, you know, how 2020 has changed the way that the economy will work. Well, 2020 changed everything for me in a bit of a different way. Because 2020 gave me a huge opportunity to go into kind of my lab. You know, we couldn't travel, not the same way we were used to anyway, and so I used that time to go and look at all of the trades we had done over the last 10 years and really go back to identifying the ones that had performed the best and find out what the differences were between the highest performing strategies and the medium performing strategies and the biggest gains, etc. And really sharpen the pencil and see what were the really unique qualities of the biggest, most explosive moves. And what we found was that a very consistent trend of this insider buying. We found that the stocks that we had alerted that were just based on patterns as a whole didn't even come close to the types of moves that we saw in the setups with insider buying. And to me, that was a light bulb moment where I said, well, when we're seeing this significant outperformance by stocks that have insider buying versus one that don't, it made perfect sense to refine our scans to only be looking for those that do. And this is kind of where smart money trading is, what it's all about. So what I want to share with you then is some examples of where we've seen that. But before we do, I want to talk about one other kind of point that we talk a lot about at Acorn, which is what the stock market really is. You know, because you've heard me talk about the market a few times here. The market crashed, the market rallied. But one of the things that I learned from one of my mentors early on was that there is no such thing as the stock market. It is a market of individual stocks, right? It's a market of individual stocks. So when you start to understand that when the market rallies, not all stocks rally. When the market crashes, not all stocks crash. I mean, we saw that over the last few months. Not the last few weeks, but most particularly from say around the middle of February to the middle of May. You may have, how many people noticed this? How many people felt or experienced watching the market, the S&P, go higher and higher in February, March, April, and even a little bit into May, but weren't really making much money themselves? How many people experienced that despite the market rallying over those few months, they weren't making the kinds of gains that they would expect to have seen over the same period? Give me a 1 in the chat box if that was you. See, what happened in that period is we saw a lot of noise in the market, and then the large caps may have been rallying, like Facebook and Microsoft and things like that, but the majority of individual stocks were actually going sideways. And so one of the things that we have been talking about in a lot of our trading rooms is that you've got to figure out where the pockets of strength or weakness are in any market condition, and be able to go down to looking for where those individual stocks that are outperforming the market in either direction are. And so I want to show you some examples again of what we're looking for. So ODT is another great example of a smart money setup. ODT is a developer for the treatment of cancer, and when we found this on our insider setup scan, the news was actually pretty bad. The news was that they were getting sued with several class action lawsuits. They were being suggested as a strong sell by analysts, and of course most people would have been scared away by that news, right? And here's a chart that I drew up for you that kind of shows you the representation of those things on the timeline. So when we found it, we had seen that Zacks had issued a strong alert last year late last year on October 26th, but just before they had alerted it as a strong sell, 3 insiders, including the CEO, had bought $68.7 million worth. $68.7 million worth. Zacks had alerted as a sell. Stock forms a fallen angel. Let me see if you can see this. Okay, there's the downward channel. All right, downward channel. And there's the ski jump. Can everybody see that pattern? Give me a 1 just to make sure that the pattern's still fresh in your mind. Can everyone see the fallen angel that I've just drawn on? Right, downward channel. Ski jump down the bottom. Right? And so this was, and then after this started to rally and broke through, this is where we alerted it as an entry at $17. Okay, and from $17 the same 3 insiders, including the CEO, who had never bought before, bought another $17.7 million worth. And so this was a perfect trading opportunity where we were able to alert that from $17 up to $27, in and out for a beautiful 50% or close to 50% profit. Right. So this is where we've got the combination of the pattern and the accumulation from the insiders, in and out. And this is where the marriage of the two become very, very powerful. Right. So this was, again, the alert was at 1574, right there as we started to break out. Now, I think that stock, after we sold it, and in fact, you'll see that with a couple of other ones I'm going to show you, that actually pulled back a little bit after that. And so, again, that shows you the combination of the two, insiders and the pattern, that really gives you that 1-2 punch I've been talking about. Vcnx, another one. Vcnx was unheard of by many people, laughed at by some. When I alerted this, some people thought, John, why are you even bothering with this company? There's probably much better known companies than this that could be worth looking at. But Vcnx, when we found this, had, again, all of these special qualities. They'd signed deals with 2 big companies on February 18th, and we saw that the directors had purchased a $3.9 million worth, around $3.80. So when we found this on our insider scan, it was sitting down at $2.30, so lower than what the insiders had purchased at. Right? So the insiders saw tremendous value in their stock at $4. So much so that the directors and insiders and 10% owners put $3.9 million of their own money in, and the stock was now trading at half that price, at $2.30 when we alerted it. Once again, we had that same pattern that I've been talking to you about today. We had the fallen angel. We had huge insider buying. So once again, this was alerted at $2.30, and it rallied up, broke out of the fallen angel setup, and shot up to $9, which was a 400% move based on their positive news announcement for their drug. And again, this is, you can see, this is actually how that alert appeared in our membership portal. So this is where you've got a long strategy, fallen angel, entry signal $2.36, exit $3.57, target 1 momentum, target 2 momentum, and that one skyrocketed as an explosive move. These are the kinds of things we're looking for. Now I'm going to show you some more recent ones that we've actually that we're holding right now in a second, but the further you get into this, the more and more exciting it gets once you get comfortable with this this idea of keeping it simple and focusing on the pattern combined with the insiders. And this is where we start to then delve a little bit deeper and develop a further layer to that insider research, right? So I want to show you a stock, TTI, which is going over to the oil and gas sector. TTI is what I would consider a very strong insider setup. So the difference between, you know, some of the ones I've shown you earlier and this one is, in some of those earlier stocks, we had 1 insider buying, 2 insiders buying, still with significant money. But in this scenario, this was a very special setup where we had 7 insiders buying. And the amounts that they were buying were significant. Insider 1 bought 216%, Director 221, you know, all the way down to Director 7, who put in an additional 982% more money than they previously had. They bought, I should say that correctly, they increased their position in their own company by 982%. Now, let me ask you guys, when you see 7 directors, almost all of them increasing their positions by triple digits, and 1 insider increasing their position by almost 1,000%, what do you think is going to happen? Do you think they maybe know something? Of course they do. So once again, we alerted it to our students, and I want you to see the combination of the 2 things. There's the pattern, right? There's the downward channel that broke to the downside. There's the ski jump, and there's your insider buying. There was actually another insider that bought after those 7 people. So by the time we'd gotten into it, it was 8 insiders who had bought. But again, 50% to 982% more than they had previously owned. And so smart money alert to our clients was at 92 cents, as you can see, as it starts to break out here. And that was a very explosive move, very quick, 200% over just a few weeks. Okay, so this is when you start to understand the value of these insiders. This is where we started digging deeper, and not just looking for a couple of insiders buying, but in fact looking for significant levels of insiders, not just 1 or 2, but 5, 6, 7, or in this case 8, where you've got triple-digit levels of accumulation, right? And there's the alert. So that's the recipe. Over 2020, that is what we started to find was common in these really explosive moves, right? That we had multiple insiders buying, large percentage increases in their personal positions, large dollar value. We're looking for positions where the move had not yet happened, or better still, that the stock was even lower than where they had purchased at. And of course, with that perfect pattern occurring as well. And to me, You know, this just makes common sense. You know, if you look at the quote from Peter Lynch, you know, one of the Wall Street gods, he says, you know, you don't have to be a Wall Street expert to make exceptional rewards from the stock market. You can discover potentially successful companies before professional analysts do. And what he was talking about when he said that quote was tracking insiders, tracking insider trading. That's what he had to say about insider trading. I mean, again, it's common sense. But common sense is often the least common of the senses, and a lot of people are trading. I've seen stocks where insiders have been selling 100% of their positions. CEOs have sold 100% of their stock, as well as other directors. And people are buying, you know, and there's tens of millions of dollars of volume happening on those companies while the insiders sell. You know, it is a much overlooked but incredibly valuable part of your analysis, and it works in any sector. It works in medical, biotech, pharma, software, hardware, energy, utilities, banking, general technology. It works in all of them. I promise you some of the stocks we've been trading recently. Here they are. These are stocks. I've sold this one about a week ago, 2 weeks ago, I think. But it's actually one I'm looking to get back into potentially. But let me talk to you about how we found this and why we still like it. So AHT, Ashford Hospitality Trust, was again a perfect combination of these setups. AHT had a when we had located it, had this had this perfect downward channel. We had our ski jump beneath, and when we located it, the directors had just increased their position by 73% for 200,000. All right, there's actually multiple directors loading up on this one and 10% owners, and so this is one that we alerted and jumped into. 237% increase, and these are, and by the way, these are not just alerts that we are alerting to our students. As I said to you at the beginning, we don't teach something that we don't do ourselves. You know, I get very excited by these because I'm not just looking for them to share with you. I'm looking for them for my own money. Yeah, and this is one that we felt very confident of, and one that we bought ourselves. This is actually a screenshot from my personal brokerage account. Right, in my US account, we bought 5,000 shares at $4, and this went straight up. This at the time of this screenshot, it was at $6.26. I sold it around there. I think it was $6.30 where I sold it for, but that was a 53% profit, or $13,000 profit, very quickly, based on something as simple as looking at the pattern and the insiders. Those are the two factors combined that allowed us to make that trade with confidence. Root, another example. Root, great leadership team. They've just announced their recent entry into Wisconsin. They've got a partnership with Safekeep. There's a lot of good things going on with Root, right? This was another trade that we've been in and out of recently and are looking at as a new potential entry in the next week or two. Could be as early as Monday, but depending on if it hits our entry signal. But Root, we've got significant insider buying over the last 12 months. These are two of the most recent transactions. Chief Technical Officer buying, 10% owner has purchased $12 million worth, right? The stock is, when we found it, was underneath the prices that they were buying for. Perfect setup, perfect pattern. And that is another one. If you actually take a look at the chart here, I'll show you this really quickly. So this was the setup on Root. You can see Root consolidating. So for those of you who understand patterns, and we've talked about it already today, but let's just simplify the chart here. There's your breakout. That was our entry signal right there at just under $10. And from $10 to 15, it's a 50% move in 1, 2, 3, 4, 5, 6 days. So we are out of it. I mean, 50% in 6 days is an explosive move. Most people don't make that in a year, let alone a week. So we're into it, we're out of it. But as you can see, it's actually just starting to curl up again. So this may be something we look to for a re-entry. Last one I'll show you, CDEV. CDEV is one we are holding right now, CDEV. CDEV has been something that we actually alerted multiple times over the last 2 years. It's been a very rewarding stock. But who remembers the crash in oil when oil went down to $0? How many people missed that opportunity? When oil was at $0, who missed the opportunity to buy oil stocks? Right? A lot of people did, despite the fact that $0 is an incredibly low price. Negative $0, exactly. Why did people miss the opportunity in oil when it was at $0? Because they didn't know which company to buy. They didn't know which company they felt safe to buy and which were the ones that may go bankrupt. So when oil was at $0, all we needed to do was simply run our insider scan and find the stocks where the insiders were loading up. And CDEV was one of those examples. We found CDEV in April of 2020. That's when oil crashed. When oil crashed down to negative levels, we scanned for the companies that the insiders were loading up on. Because think about it. What director is going to walk out and spend $23 million of their own money on their own stock after just walking out of a board meeting saying that the company was about to go bankrupt? No one is. And you know that they've had those meetings. Of course they're having those meetings with oil crashing. Hey guys, are we okay? Can the company survive? Whatever those meetings were, $23 million worth of insiders decided to buy stock in this company after the market crashed. And so this made perfect sense. We alerted this at 33 cents. It is now over $7.50, I believe. That is over 2,000%. Right? If you were to put $1,000 into that, when we alerted that in April last year and held that, like many of our students have, that's a $1,000 to $20,000 profit. Right? And if you put more in that, you can do the math. It's 10,000 to 200,000. And this is when you start to see the longer term potential plays, right? We've been in and out of this many times. So we were in at 33 cents. We were out at 4. We got back in at $1. We got out at 3. Our most recent trade, I am in this right now. Because we've built a very profitable position in this. We've got more money in it. That's why it's a larger position. But we're currently holding 7,600 shares at $5.31. This is the most recent screenshot at $6.47. But again, this is up. This is now up to around $7.50. So we've got a 30+% profit on the most recent trade. Again, and this is just over the last few weeks, right? These are the types of explosive moves that are possible when you combine insiders with the pattern. And this is, again, as I've said, it isn't just about trades that we're looking for you. This is the trades that we're looking for ourselves. So I hope by now you can see the level of excitement that these types of setups can provide. You know, people overcomplicate their trading so much when you really don't need to, right? Insiders are the most powerful indicator out there. They are the most powerful level of fundamental research you can do because they are the ones that know it better than anyone else. And when you combine that with a very high probability pattern like the fallen angel, then you have your ticket to ride. Roll Tide. So you have two choices now. I mean, you can go out there and start incorporating insiders into your trading immediately if you'd like. I certainly encourage you to and would wish you luck. But you know, this is a very, very kind of niche way to trade that is something that I've been doing for the last 15 years now. And that is your second option, which is to do it with me. Right? We have a very powerful way of finding these and scanning for these, where we are looking for that combination of the perfect pattern and very heavy levels of insider buying across multiple directors with huge percentage increases in their positions and big dollar amounts that you won't find anywhere else out there. It is very unique to us. It's a very special strategy that we follow. And of course, that is the offer that I'd like to present to you today. This is our Smart Money Setups package. And there are a few parts to this. So I will just explain this to you as to what you're getting. But of course, the most important part to get off to the races right away is the alerts. We have, what we do is we publish 5 alerts per week. Okay, so I think that answers your question, RK. 5 alerts per week with our favorite 5 actionable setups. These are setups that we are looking for, again, which have the essence of everything I've shown you, the pattern, the multiple insider buyings. We even go one layer deeper than this. We're the nerds in the room that you want to do your homework. When we find these setups, we even go and look at the insiders themselves, and we research the last 10 years of any trades they have done on any stock they have been an insider of. And so we look at the stock's pattern, we look at the insider, the levels of buying, and then we even go back and look at the track record of those insiders on any time they've bought and sold before in the last 10 years. And if we find that, hey, that insider happens to always sell at the top and always buy at the bottom, well, now we've got something really special on our hands. And I love doing this. So that's where those alerts come from. You get 5 a week. We'll break down all of that, all of those juicy nuggets in the alert, in the video alert, with the pattern, the entry signal, the exit signal, the targets, stop losses, options. If you're an options trader, we'll talk about the option that we're looking for on it. If we have any updates on the positions, we'll send out a text message alert, but almost everything is done end of day, right? On top of that, we then have live classes, so that instead of just getting fed the what, you're going to be able to learn the why. So our trading rooms on Tuesdays and Thursdays are very different to most people's trading rooms, because we're not just looking at the markets and going from chart to chart to chart. We're actually teaching. So we'll be running the scans, looking for new ideas. We'll be analyzing the positions we're in and talking about how to manage the stop losses, manage the profit. When we send out an alert, we update that alert every single day until it's done. Right? A lot of people will say, hey, here's a good stock. It could go up, it could go down. Here's an idea. We follow up on every single alert until it's done. So if that alert runs for a year and a half, like CDEV has, we will be updating that until it's done. Right, so we stay married to it all through the process. So those Tuesdays and Thursday sessions are going to allow you to learn and earn, so to speak, at the same time. And you can ask your questions and anything that you, any stock ideas you want to bring to us at the same time. A huge bonus on top of those 3 months of alerts and live classes is we are also going to include the Smart Money Trading course itself. So how many people in here really want to learn the why behind the what? How many people in here is that important to? You know, you don't just want a trade idea, you want to really understand how to do it yourself, understand how we found it, you know, the bits and pieces behind. Yeah, a lot of people, and I commend you. Now, if you don't want to, you don't have to. You can just follow our alerts, and again, we're doing all that work for you anyway. And many people will just follow those alerts. But for those of you that want to be able to harness this power for yourself, to be able to look at any stock you own and understand what the insiders are doing and how to look at it, you know, to be able to scan for your own ideas if there's a particular industry you're interested in and you want to take advantage of that and don't know how to find the most powerful setup, this is for you, and this is really exciting. This Smart Money Trading course is something we've built over the last 10 years. And what it does is it gives you the why, right? It'll start out by showing you what are the most powerful setups in the market? I mentioned that I've studied over 150. You do not want to be studying 150 patterns. You definitely don't want to be trading 150 patterns. But I've studied these, and we've come up with a list that is ranked of what those top patterns are that have the highest probability, the highest profitability, and are ones we can scan for. Has to be all three. And so we'll teach you what those patterns are and why they are the highest ranking. We go through the core characteristics of high probability patterns. We go through how we set and forget entry and exit signals once we find patterns, and how to set up those orders in your brokerage account. And when we go through a 5-step process of how to evaluate every single trade that will give you basically the same smart money structure that we go through. All right. That then is the foundations of the course. That will mean that when you pull up any chart, you'll be able to identify the correct support and resistance. You'll be able to identify whether you should be looking at moving averages or not. And then, and from that tells you what the pattern is. That's the foundations. But the real gold, and why we're laying those foundations there in the first module, is so you can then have access to our insider scans. And by the way, you'll get lifetime access to these scans. We give you the criteria. We don't hold anything back. There's no black box secrets. There's no special software you have to buy. We set you up with a free software, right? It's a free online scanning software. You don't need to pay any money every month. Nothing like that. We set you up with a software, and then we give you the criteria, the algorithm that we're looking for our insider longs and our insider shorts, and you will have that for the rest of your trading life so that you can run scans for these exact opportunities. All right, that is the goose that lays the golden eggs, and that is how we have found all of the setups I talked to you about today, and that'll allow you to look for the stocks with heavy insider selling as well as heavy insider buying. So at the click of a button, you can find these setups. Again, these are also tools you can use to analyze your own portfolios, but that is how we find all of the setups I've shown you today and the ones where our alerts will come from. This is a really valuable offer because it's not just about 3 months of alerts. Even that alone, you should be able to see many multiples more than what you're investing in the course in terms of what we would expect from results from those setups. But beyond that, you've got an education that lasts for life, and then you've got a new tool, a new weapon in your portfolio that you can use to find setups for the rest of your life, and that is worth a hell of a lot more than $397. So that's a breakdown. I'll put do we have the link in the chat box already? I'm not sure. If not, I'll put it in there here. acornwealthcorp.com/now. Another thing that I have included for you is one-on-one training, because I know this is a journey that you really want to get right. I was sitting at a dinner with my mother and father a few days ago. It was my mother's birthday, and we were talking about a lot of the stuff that's going on in the world and how a lot of people have very interesting opinions on both sides of the equation. And I said to my father, I said, it's hard for me to take a strong opinion on the topic we were talking about because I only know what's public. I only know the Facebook news. I only know this. I only know that. I said, I don't feel like I know enough to make a strong opinion. And my father made an interesting comment. He said, yes, it's the most dangerous type of knowledge people have is enough to be dangerous, right? He said the most dangerous thing is when people have enough knowledge that they think that they go and make a strong opinion about something, whereas the most dangerous knowledge is what we don't know that we don't know, right? What we don't know, because we don't know what we don't know to ask or seek that information, to ask those questions. Anyway, long story short, it's very relevant to trading because a lot of people will go and learn how to look at a chart and how to identify support and resistance, and they learn it the wrong way because most educators don't teach it don't teach you the things that we will show you. I can promise you, even if you've been in the market 30 years, you're going to learn things in this course that no one has shown you, and I believe are critical to people's long-term success. And when you start to see that, there's going to be a lot of aha moments that go off that'll probably clear up a lot of confusion you've had in some of your trading before. And that is why the one-on-one training is included. Despite its high value, it's normally $1,600. It's normally $400 a session. You have 4 personal one-on-one mentoring sessions included and unlimited support. And the reasons why we do that is that if you want to utilize it, we can jump on the phone, we can watch you run the scan, we can watch you pick out the stocks from the scan and analyze them, and we can see if there are any of those weak spots that you might know, or any mistakes that you're making that you might not know that you're doing. And some of the aha moments that we've had in those sessions have dramatically shifted people's track that they're on, because they never knew to ask if they were doing it wrong because they thought they were doing it right. So anyway, that is a huge piece of value in the course, is the one-on-one training, and that's going to tie everything together. So you have the why, you have the what, and you have the help and the guide to get you there. Gosh, I realized, I'm just looking at the clock, I realize I've gone over time, but can I answer a couple of these questions, Jeanette?
You sure can. Have at it.
Okie dokie. So questions. Do we provide the scanning tools, and can you keep them later without the subscription? Absolutely. Yes. Yes, you can. So true. Stay green and growing. Yeah, exactly. An upward trajectory, baby. All right. Are these smart money insider transactions a search of the SEC filings or something more? It's more than that, because what we're doing is we're combining all of the ingredients. You know, we're not just looking for insider buying. What we're looking for is we're looking for the right kind of insider buying, right? We're looking for where we have got multiple insiders. It's got to be the right kind of insiders, right? So the CEO, the CFO, Chief Financial Officer, Chairman of the Board, executive directors. We're looking, and then we're looking at the dollar size that they're buying, but not just the dollar size, but also the percentage it increases. Because if an insider buys $1 million worth of stock, that at its face value might seem interesting, but if they're a multi-billionaire, right? Like, for example, there's a stock that we're really excited about, which will be one of your alerts this coming week. I've got some really good alerts for you, by the way. This is a really good time to start, because we found some real goodies. But one of the ones that I'm going to be alerting over the weekend, this stock has had an insider behind it that is one of the wealthiest men in North America, and they have been selling almost everything else, but for the last 12 months, loading up on this stock and only this stock. They are one of the top 50 wealthiest men in all of North America, and they have been selling off their yachts, they've been selling their private jets, they've been selling the other stocks that they're insiders of, but they have been putting millions of dollars every week almost for the last 6 months into this pharmaceutical company that has upcoming news. I'd be surprised if you don't make many times your $397 off just this one idea. But that is valuable insider information, right? It's putting it in context. So when that insider is buying, that buying has a lot of meaning when you put it into the picture. And the percentages that very wealthy man has been purchasing have been sizable, right? Big percentage increases. So it's not just the dollar size that's happening, it's more of the picture, the percentage that they're increasing by, right? So if we see a chief financial officer put $500,000 in, but that represents a 600% increase in how much stock they had owned previously, well, that is exciting, because that shows that someone's getting greedy. They're very high conviction. Now, we get, by the way, if this feels like information overload to you, don't worry. We go over all of this in the course and show you exactly what this recipe is. You don't need to worry about writing it all down now. We're going to take you through in a very structured way over the course of your live learning, through the alerts, through the course itself, which is suitable for anyone of any level of experience. But yes, I guess the short answer is it's far more than just looking at the SEC filings. And then, of course, the combining that with one of the highest probability patterns, so we've got probability on our side. Okay, is it possible that management could get it wrong and send the wrong signal through their insider selling of a stock? Well, Gio, management can get it wrong, which is why the combination of the pattern, well, why we're looking for multiple insiders instead of just one, and why we're also looking for the pattern. That 1-2 punch is how your probability increases more and more and more, right? But if I understand your question, if they're selling their stock, could they be wrong about the stock going down? You know, if you're talking about a shorting opportunity, there are many reasons why management could sell. Management could sell because they have tax obligations. Management could sell because they're unsure about a drop or where the market's going to go, so they're looking for a safe bet. Management could sell for a multiple set of reasons. So what you'll notice is that in our insider short scan, we actually combine. It's about 4 times bigger than our insider long scan, because when we're looking for a short, we actually combine heavy levels. We actually look for certain things like very heavy levels of debt, and we look for signs of industry-wide selling. So when we're looking for shorts, part of what we'll show you how to do is we'll look for the shorts where the insiders are dumping 50, 60, 80, 100% of their stock, but we'll also look for those opportunities that are in the sector, or even better, industry, that has the heaviest amounts of broad spread selling across all sectors in the same industry. This stuff, and it's easy to do. It's at a click of a button. I will show you how you get that information. One click of a button, you can see exactly which sector or industry has insiders selling across all stocks in that area. Right? So is it possible that management gets it wrong? Sure. But is it possible that management gets it wrong across 80% of stocks in that same industry? Unlikely, right? And then when you combine weak fundamentals and the perfect pattern, now the probability is even better, right? So again, all of these things are covered in the course. Scanning course is, oh, and by the way, just to finish that thought off, while management can get it wrong on the sell side, and while people can sell for more than one reason, insiders only buy for one reason, and that is because they expect to make a lot of money. Insiders only buy because they expect to make a lot of money, and that is why the insider long scan is one I get very excited running. I without spoiling it, without going for another 15 minutes talking about these ideas, the ideas we'll be publishing this weekend are exceptional. I'm very excited about them, and you'll get access to that immediately. In fact, if you subscribe right now, you fill out the form there on acornwealthcorp.com/now, you are going to get instant access to those ideas that we've just published, so you can start getting ready for Monday, because some of those are already starting to move. Are the options directional? Yes. Is the renewal at 397? Now, you are not auto-renewed. If you do not wish to continue past 3 months, you just want to go, take the course, and after 3 months start finding them for yourself, no problem at all. I think you'll love our alerts. That's of course us doing the work for you. If you do decide to continue beyond 3 months, then yes, you are grandfathered in at 397. You are grandfathered in at 397, absolutely. John, excellent presentation, just signed up. Looking forward to my one-on-one in the near future. Australia is paradise. Thanks. Actually, we just got to Cairns. We are in northern Queensland, up at the Whitsundays. So I haven't been here in 20 years. I'm super excited to explore my own backyard. Question, do you consider SMMT, Summit Pharma? I can take, I'll see if, we've run out of a little bit of time, running short on time here, guys, but I'll take a look at it in the background while I'm answering the other questions. Tim, with so many insiders using options to take positions now, does that now limit the program to smaller priced stocks? I don't have any problem with smaller priced stocks, by the way, Tim. I find that, I mean, we are looking for the diamonds in the rough. We are looking for the stocks that have, that are $3 that could potentially be a $30 stock, like CDEV, right? A fallen angel, when we find it, in fact, will often be a stock that used to be $80 that has maybe pulled back to $5 because they've been aggressively shorted and hammered down, and then all of a sudden the insiders step in big time. And strong reversals happen. Just remember, the number one goal of investing is to buy low, sell high, right? So when I'm not really ever interested in buying high, selling higher. If you can tag the bottom of the stock, that gives you so much room to allow it to run when they really take off without being worrying about pullbacks and drawdown. But we will never be alerting to you OTC companies or penny dreadfuls, as I call them. We are not looking for stocks that are headquartered in China. Not that I have anything wrong with Chinese companies, but you can't. The fundamentals are not as transparent as those in the US. So look, I mean, again, we're looking for these stocks for ourselves. I'm not going to go and put, a big chunk of money into a stock unless I feel very confident about it, and we wouldn't be alerting it to you either. So, in fact, and just one other thing, we try to actually, when we are scanning for opportunities, we often do eliminate the options from the process. So we are only looking really for where insiders are putting cold, hard cash into buying shares in the open market. Not through option agreements or things like that. We want to see heavy, big dollar, greedy buys from the insiders. I hope that answered your question. By the way, SMMT is probably just a little bit too speculative for me. It's only trading at about 100,000 shares a day, it looks like, and so it's a little bit too low volume. It's picked up recently, but yeah, it's probably not the perfect pattern for me. I personally would probably be looking for something with a better pattern. That's the number one reason I would be looking at something else. And once you see some of the alerts that I'm going to be sending you over the weekend, you'll understand, you'll understand why. Okay. I think that how much for just the alerts? You can subscribe to just the alerts for $197 a month. So again, that's why this is such a great deal, because at $397, you're getting the smart money indicators, you're getting the smart money alerts, the live trading room, and the course. So even if all you did was follow the alerts, you're still getting a great deal here, which would, just on the alerts alone, you're still saving money at $397. Are there stock trade options? Are there options on the stock trades? Yes, there's plenty of optionable trades. Not all of them are optionable, but I'd probably say a good 60% or more. And on the shorts, almost 100%. So, but what we do is we publish enough alerts So for those of our students that are option traders, there are enough option trades, right? So something like, you know, something like a $5 stock that's only trading 500,000 shares a day might not be have a super option chain, but I'll still buy that. But if the upside is from that to go from $5 to $50, I mean, again, as a trader, I to be honest, I personally don't care whether I'm in an option or a stock. If I've got the potential to make 500% in a risk appropriate way, I don't care what vehicle is. So, you know, whereas an options trade, I think most option traders would agree here. If you could make 500% or 100% or even 50% in a week or a month on a stock trade, that's just as good as most really good option trades. Because if you're dealing with a highly optionable stock that's maybe trading at $300, is it likely for that stock to go from 300 to 900? You know, when you start to get some of those bigger stocks, you might get less of a percentage move, but you'll be able to leverage it more to get the same kind of percentage by using the options. So that's where it all balances out. But there is plenty of optionable setups for you to take advantage of. There's something for everybody, whether you're a small, medium, or large cap. All right, does that answer your question? I hope so. Can I use the indicators on TradeStation, Interactive Brokers? Yes, you can use them on TradeStation. We don't worry about NinjaTrader and Interactive. I actually trade through Interactive Brokers. I don't use it for charting. I think the charting is terrible. I use TradingView, Wealth Charts, and Incredible Charts for my trading, depending on what platform I'm using. They all work on all of those, as well as Thinkorswim, TradeStation, NinjaTrader. Sorry, NT8, I guess that is NinjaTrader. So yeah, our indicators do actually work on NinjaTrader. What else? Thinkorswim, TC2000, Wealth Charts, TradingView. Is this for day trading also? You know what? Let me show you if I can remember a stock. Was it Root? I can't remember if it was Root or something else. The point is, we've actually had trades that have which we have programmed in as swing trades that have ended up being day trades. What was the other one? Oh, WKHS, that was it, I think it was. So we found this with our smart money scan, and WKHS was once again a beautiful fallen angel, which we really liked for a swing trade, If we found it with our scan, perfect pattern, everything was ideal, and we programmed an entry at $10, and the target was 1783. And even though it was programmed as a swing trade, which we thought would take 3 or 4 weeks for it to go from 10 to 16 plus, it happened in 1 day. So I mean, can you use it for day trading? I mean, look, I would say yes, because if you're going to day trade a stock and you're looking for a 1-day massive move, if you're looking to maximize the move in that 1 day, then you should be starting off with a great stock, right? Even if we're looking at it for a 3-week to 6-week hold, we like them for 3 to 6 weeks because they're so powerful. So these are the ones that if you're going to stick to a day trade strategy, should have the highest probability of a large intraday move. You're just going to, it might be something that you get in and out of, versus what I would be doing with it, which is just holding throughout. If I was day trading, and the only reason I don't is because I just don't want to give my time up. I don't think you need to day trade to make just as much money or more swing trading. And then you have your time free to do with it what you want. And so I would say that you might find that you come over to the dark side and start set and forget trading with me after a little while. But again, I hope that answers your question. Yes, I believe it's very important for day trading because you're starting out your day trade with a pre-qualified, very high probability breakout move. Any other questions, guys? I think I've probably taken up enough of the time. By the way, just a quick example of that day trading situation. PROG is a great example of that day trading setup. I was trying to think of another one. This one, by the way, full disclosure, the Acorn trading account holds a position in for full disclosure purposes. This is another one of our smart money alerts, massive insider buying. And I don't know who notices this, but this is actually a flag formation. A flag formation is the highest probability breakout pattern that exists in the market. It is absolutely really good for sideways market conditions as well. Like really, really, really good, because breakouts are just perfect when a market's going sideways. We are in a bit of a sideways choppy market at the moment, so flags are doing incredibly well, and I'm scanning for these every day. This is a flag formation. We alerted this to our students last week on Monday, sorry. We have bought this ourselves right there at around $3.10. That's already at $3.95. We've already made about 30+% on that. But as a day trade, I mean, who wouldn't want to day trade that? Up 3.69% on the Wednesday, 5.3% on the Thursday. On Friday, up 11.27%. I mean, who doesn't want to day trade an 11% return in a day? And if you're using leverage, that could be 30% return on your capital invested. So there you go. Will you marry me? Lisa, I would marry you. You sound lovely. My girlfriend might not like that though. Guys, again, that's another example of smart money trading. That is an active position, and these are the kinds of, and that's why I'm so excited about the setups that you've got access to immediately, right now. Once you've filled out the form, you'll get your username and password, log into the portal, get your access, go to the smart money setup videos and watch those. If you've got a little bit of extra time over the weekend, go to the trading room recordings and watch those live lessons from Tuesday and Thursday that we've just done this week, because those were awesome sessions where we went through our favorite setups for the week coming up. So much value. I hope you share my passion and will be joining us today. It will be well worth your while. I'll be making a special extra effort over Sunday to pick out our favorite ones to welcome you onto the Acorn family. Does the scan work?
Oh,
thank you, guys. Oh, yeah.
You can ask
you, everybody.
Go ahead.
Does the scan work in TradeStation? We don't run our scans in any in the scanning software, in the trading softwares. We do all of our scanning in this one specific program, but so that it can work for everybody. You know, we didn't want to develop a program that would work for TradeStation users and not for TOS users. So when we're doing the scans, that is done in an independent software which we set up our scan criteria inside of for you. So you find your stocks there, and then you load them into and then you bring your favorites over into your charting platform to look at. That's how I do it. That's how everyone does it. It's very, very easy, very simple. And so the short answer to your question is no, we don't use TradeStation. So everybody can use it in the software we do use. All right. Jeanette, over to you. Thank you so much for patiently allowing me to run through all those questions. It was very generous of you.